Hey guys, so this is the third video I'm making dissecting what candlesticks are and how we use them in our trading. Let's get right into the video. So let's go over some general points you guys want to keep in mind while you're learning about candlesticks. So remember, candlesticks can tell us specific information about what is happening to price. It tells us how much buying there is, how much selling there is. It tells us how strong a candlestick is. It tells us how much momentum is in the candlestick, and it can help us determine what's going to happen to price next. So also keep in mind, some candlesticks are a lot more important than others. Not all candlesticks have the same value. There's some that are more important than others. So we look for these specific important candlesticks when we are making decisions, when we are entering trades, when we're getting out of trades. These candlesticks can help us a lot in managing our positions. Candlesticks can suggest when a reversal is going to happen. Candlesticks can tell us when a stock is going to change direction. And so yeah, we look for specific candlesticks that can help us make decisions in our trades, knowing when to get in and knowing when to get out. So let's dissect this first candlestick. This first one we're going to cover is called a narrow range bar. It's kind of in the name because this bar is very narrow. These candlesticks only move a little bit while they are being formed. There's only a small price difference between the open of the candlestick and the close. So if you look at this first green bar, you can see it opened at the bottom and it closed very close to the open. There's not much price difference between the open and the close. So these ones also tend to have small tails, and you know the wicks, the tails, tell us that the price moved to that area while that candlestick was being formed. So overall, these candlesticks don't move a lot. They're kind of sitting at the same price. And we like these candlesticks because they can tell us a lot of information. We'll get into it later, but these candlesticks can basically tell us when a reversal may happen. These candlesticks may tell us that momentum is running out because it's not moving a lot. The candlestick is very small. And they help us a lot in our trading strategies. We're going to be going over the patterns and strategies later on. So I just want you guys to be able to memorize and just remember what this candlestick looks like. So when we go through the strategies, you automatically know what this candlestick is. The second type of bar is called the wide range igniting bar. This bar is used when it ignites a move in a direction. So let's start off with the green bar. So as you can see, the bar, it's an above average sized bar. It's usually bigger than the rest. So with these candlesticks, price usually opens near the very lows of that candlestick. You can see there's not a large wick. These bars tend to open near the bottom 20% of that bar, and they tend to close near the top 20% of that bar. You can see there's not a large wick, which means once it touched these prices, it closed near the highs. So it's basically opening near the absolute lows and opening near the absolute highs. The wicks are not very large. So this bar suggests to us that there is a lot of buying. It is dense with demand. This is a very bullish candlestick because it opened near the bottom and it moved all the way to the top and it closed near the high prices. And we use this bar because it ignites a move into a direction. We're going to go over this when we explain the strategies. I just want you to understand what this bar is and why it's significant. Same thing applies to the downside. It's the exact same thing. For the red bars, they are dense with a lot of selling, with a lot of supply. When it opens, it's very close to the highs of the candlesticks, and when it closes, it's very close to the low of the candlesticks. So there's not large wicks. It tends to open near the top 20% of the candlestick and close near the top 20% lows of that candlestick. And once again, we use these candlesticks when they ignite moves into a specific direction. Remember why this candlestick is important. Remember what it looks like, because when we go on to the strategies later on, these candlesticks and the narrow range bars are going to appear a lot. So I just want you guys to remember what they look like and what they are. There's an igniting bar. Now we're going to go over the change of power candlestick, and there's an example on the next slide. but just write down some notes on what this candlestick is. So basically, the change of power candlestick, the COP bar, COP, basically tells us that price is about to change direction. It's either going to go from buyers to sellers, or price is going to go from sellers to buyers. And this only works if a candlestick had a multi-bar move in one direction before the change of power candlestick appears. So if you don't know what that means, I'm going to just show you real quick. It needs to have a multi-bar move in one direction before the change of power candlestick can appear. Multi-bar move in one direction before we can find this change of power candlestick. And this change of power candlestick can be found in many different forms. There's not just one specific type of candlestick that represents the COP bar. It can have a candlestick with a bottoming tail, with a topping tail. It can even be an igniting bar. It can be a narrow range bar. It could be a doji bar. There's not one specific form of the change of power candlestick. And the importance of a COP bar is that it focuses on the opening price versus the closing price, and then the closing price versus the opening price. So I'm going to show you an example so you kind of understand what I mean. So let's take a look at this first example. So first we see that there's 3 consecutive green bars. 3 consecutive bars where price opened below the close. It opened down here and it closed above it. It opened down here and it closed above. Opened down here and it closed above. Now we see that there's a change of power candlestick. For the first time after this 3-bar move, price opened above the close. Now, this could suggest to us that a reversal may happen. The power is shifting from the buyers to the sellers. Also note, we could see a topping tail. And if you guys remember what that is, when there's a topping tail, that means buyers pushed price all the way up here and then sellers pushed it all the way back down. So after this consecutive move here, we can see this candlestick, and this suggests to us that for the first time after this move, the sellers have won the battle, and it signifies a change of direction may be occurring. Second example, we see 3 consecutive red bars pushing price lower to the downside. We could see a large igniting bar. We could see this bar right here is dense with selling. We also notice here that there's a narrow range bar. So looks like there was a lot more selling happening here than here. This bar is a lot smaller than this one. That can suggest to us maybe that, price is losing its momentum. Then we see a change of power candlestick. Price closed above its open. It opened down here and closed up here, while all of these were the opposite. And this bottoming tail can suggest to us that the buyers have won the battle for the first time after this multi-bar drop. Based off of this candlestick, it could suggest to us that buyers have taken control and price is about to move in the next direction, in the new direction. Here's a third example. Here we can see there's 4 consecutive red bars moving lower. We notice that there's 2 igniting bars right here. 2 bars that are dense with a lot of supply, dense with a lot of selling. That suggests to us that price is dropping a lot. Sellers are taking control. And then all of a sudden right here we can see 2 candlesticks. The first one is a narrow range red bar. This could tell us that there wasn't as much selling as there was before. So we could think to ourselves, okay, is the momentum running out? After that bar, we can see that there is a green bar. That is a doji bar. But the close was above the open. We also noticed that, it's a doji bar. There's wicks on both sides. That tells us, okay, for the first time after this multi-bar move, we could see that the buyers and sellers are equal, because if you guys remember, whenever we see a doji bar, that means that neither the buyers or sellers have won the battle. Here, sellers were dominating. Sellers were pushing price down. Narrow range bar, less selling is happening. Green doji bar, the battle is now even. This could suggest to us that maybe price is going to change direction. And here in this example, it did. Now, it's also important to note that, those candlesticks by themselves are not going to make us make decisions. We don't make decisions based off individual candlesticks that I just showed you. I'm just teaching you these candlesticks and their significance because later on, when we do create these strategies, I'm going to be introducing to you different patterns where we see multiple different types of candlesticks. So let's do a little recap and some important notes that you guys should keep in mind. It is impossible to learn strategies if you do not master the candlesticks first. You can't just jump into learning how to enter trades and how to exit trades if you don't know the anatomy of candlesticks. If you don't know what a bottoming tail is, if you don't know what a topping tail is, if you don't know what a wide range or narrow range bar, if you don't know what the change of power candlestick may look like, you're not going to be able to learn how to trade if you guys don't master this first. This is like step number one. And eventually, as you practice trading and if you review your notes, these candlesticks should eventually become second nature to you. When you look at a candlestick and you see a topping tail, you shouldn't have to think to yourself, okay, topping tail, that means that it moved up and then the sellers went down and who won the battle? Oh, it was the sellers. No, it can't be like that. It has to be automatic in your head. Topping tail, bearish. That bar is bearish. I see a narrow range bar followed by an igniting bar, whatever. You need to automatically be able to understand what you see in real time. Traders are fast. We make decisions on the spot very quickly sometimes. And if you guys don't master what I just showed you, then you won't be able to learn the rest of what I'm going to teach you, and you are not going to be able to, understand what you see when you actually take trades. And a third point I want you guys to remember is that what I just taught you about these candlesticks, we're not going to be taking trades based off the information that I told you. We don't take trades based off one individual candlestick. I just taught you guys this because later on, when I'm going to be teaching you the strategies, when I'm going to be teaching you the different patterns, you need to already know how each of these candlesticks work, because when we put them together, they're going to create patterns on setups that we take and we take trades on. We study candlesticks together to see the patterns they form. One individual candlestick will not tell us enough information, but you still need to understand how they work and what they can signify. Later on, we're going to be looking at multiple patterns of multiple candlesticks on multiple time frames that can help us create strategies and take trades. Candlesticks are like the fundamental part of trading. It's like if you want to make ice cream, you can't do it without the dairy. This is like the base. This is the number one thing you need to learn, or you won't be able to learn anything else. So it is very important for you guys to master this, because when we're going to be looking at charts in the future, when you guys are going to be taking trades, you need to be able to form pattern recognition. You need to be able to look at something and immediately understand what it means. So that basically sums up the candlestick introduction. Later on, I'm going to be teaching how to put these candlesticks together to actually create patterns and create strategies. But I hope you guys enjoyed this video. Let me know if you have any questions and anything you don't understand. And yeah, guys, let's get into the rest of the videos.